Welcome to today's video, where we dive deep into the fascinating journey of Bitcoin. From its meteoric rise as a revolutionary digital currency to its tumultuous crashes, we'll explore the key moments that defined Bitcoin's history and shaped the world of cryptocurrency. Bitcoin, the first decentralized cryptocurrency, has experienced a meteoric rise and dramatic falls since its inception in 2009. Created by the pseudonymous figure Satoshi Nakamoto, Bitcoin was envisioned as a decentralized digital currency that could revolutionize the financial industry by eliminating the need for centralized intermediaries like banks and governments. This video explores the rise and fall of Bitcoin, examining its history, major milestones, and the factors contributing to its fluctuating value. The birth of Bitcoin, a revolutionary concept. Bitcoin was introduced to the world through a white paper titled Bitcoin, a peer-to-peer electronic cash system published by Satoshi Nakamoto in 2008. This decentralized structure was the key innovation that set Bitcoin apart from traditional currencies and payment systems, as it eliminated the need for intermediaries to verify and process transactions. In January 2009, Nakamoto mined the first Bitcoin block, known as the Genesis block or Block Zero, and the Bitcoin network officially went live. In the early days, Bitcoin had little value, and it was primarily used by a small group of tech enthusiasts who saw potential in its underlying technology. At this stage, Bitcoin was far from being a mainstream currency, but its unique features were slowly gaining attention. The early rise. Bitcoin gains value and recognition. The first significant milestone in Bitcoin's rise came in 2010 when a programmer named Laszlo Hanyecz made the first recorded purchase using Bitcoin. Hanyecz famously paid 10,000 Bitcoins for 2 pizzas, marking the first real-world transaction with the digital currency. At the time, 10,000 Bitcoins were worth only about $41, but this event is now celebrated as Bitcoin Pizza Day, a symbol of Bitcoin's early days. As more people began to understand the potential of blockchain technology and Bitcoin's decentralized nature, interest in the cryptocurrency grew. In 2011, Bitcoin reached parity with the US dollar for the first time, with 1 Bitcoin equaling $1. This was a significant moment, as it marked Bitcoin's emergence as a legitimate form of currency. Bitcoin's value continued to climb throughout 2012 and 2013, driven by increasing media coverage and growing interest from investors and tech entrepreneurs. By the end of 2013, Bitcoin had reached an all-time high of over $1,000 per coin. However, this rapid rise in value was followed by a dramatic crash, as Bitcoin's price plummeted to around $200 in 2014. The first major fall, the Mt. Gox scandal. One of the most significant factors contributing to Bitcoin's first major crash was the collapse of Mt. Gox, a Tokyo-based Bitcoin exchange that handled approximately 70% of all Bitcoin transactions at the time. In early 2014, Mt. Gox announced that it had lost 850,000 Bitcoins, worth around $450 million at the time, due to a hacking incident. This event sent shockwaves through the Bitcoin community, leading to a sharp decline in confidence and a massive sell-off of Bitcoin. The Mt. Gox scandal highlighted the vulnerabilities in the early cryptocurrency infrastructure, as exchanges and wallets were still in their infancy and lacked robust security measures. The collapse of Mt. Gox not only caused a significant drop in Bitcoin's value, but also led to increased scrutiny from regulators and governments, raising questions about the safety and legitimacy of digital currencies. The recovery, Bitcoin's second wave of growth. Despite the setback caused by the Mt. Gox scandal, Bitcoin began to recover in the years that followed. One of the key factors in Bitcoin's resurgence was the growing interest from institutional investors and financial institutions. In 2017, Bitcoin experienced another meteoric rise, driven by increased adoption and the emergence of initial coin offerings, ICOs, which allowed startups to raise capital by issuing their own cryptocurrencies on the blockchain. By December 2017, Bitcoin reached its highest value to date, surpassing $19,000 per coin. This unprecedented surge in value attracted widespread attention from mainstream media and the general public, leading to a wave of new investors entering the market. However, this period of rapid growth was short-lived, as Bitcoin experienced another dramatic crash in early 2018. Within a few months, Bitcoin's value dropped by more than 80%, falling to around $3,000 by the end of the year. This crash was primarily driven by regulatory crackdowns on ICOs, concerns about market manipulation, and the bursting of the speculative bubble that had formed during the 2017 rally. The role of regulation, a double-edged sword. One of the ongoing challenges facing Bitcoin and the broader cryptocurrency market is the role of regulation. Governments and regulatory bodies around the world have struggled to define how to classify and regulate digital currencies. Regulation can be a double-edged sword for Bitcoin. On the one hand, increased regulatory oversight can help protect investors and reduce fraud, making Bitcoin more attractive to institutional investors and mainstream users. On the other hand, overly restrictive regulations can stifle innovation and limit the growth of the cryptocurrency market. The ongoing uncertainty surrounding regulation continues to contribute to Bitcoin's volatility as investors react to news of government actions and policy changes. Bitcoin in the mainstream. Adoption by major corporations. One of the most significant developments in Bitcoin's recent history has been its adoption by major corporations and financial institutions. In 2020 and 2021, several high-profile companies, including Tesla, Square, and MicroStrategy, announced that they had purchased significant amounts of Bitcoin as part of their corporate treasury strategies. This marked a turning point for Bitcoin, as it was increasingly seen as a store of value and a hedge against inflation, similar to gold. These developments further legitimized Bitcoin in the eyes of the public and helped drive its value to new heights in early 2021, when Bitcoin reached an all-time high of over $60,000 per coin. The environmental concerns. Bitcoin's energy consumption. While Bitcoin has experienced tremendous growth, it has also faced criticism for its environmental impact. The process of mining Bitcoin, which involves solving complex mathematical puzzles to validate transactions and secure the network, requires a significant amount of energy. Bitcoin mining operations consume vast amounts of electricity, leading to concerns about the environmental sustainability of the cryptocurrency. In 2021, Tesla CEO Elon Musk announced that the company would no longer accept Bitcoin as payment for its vehicles due to concerns about the environmental impact of Bitcoin mining. This announcement contributed to a sharp drop in Bitcoin's value, as it raised questions about the long-term viability of the cryptocurrency in a world increasingly focused on sustainability. The future of Bitcoin. The rise and fall of Bitcoin have been marked by periods of rapid growth and sharp declines, driven by a combination of technological innovation, speculative investment, regulatory challenges, and environmental concerns. While Bitcoin has faced significant volatility, it has also demonstrated remarkable resilience, bouncing back from crashes and continuing to attract interest from investors, corporations, and governments. Whether Bitcoin will ultimately succeed as a global currency or remain a speculative asset is yet to be seen, but its rise and fall have already left an indelible mark on the world of finance and technology. Thanks for joining us on this roller coaster journey of Bitcoin's rise and fall. The story of Bitcoin is far from over, and its future remains uncertain. If you enjoyed this video, be sure to like, subscribe, and share your thoughts in the comments below. Stay tuned for more insights into the world of finance and technology.